tendering pipeline, which we said is certainly weighted to the second half. So in summing up, on page 22, very good result in what has been a very tough market. We've maintained a strong revenue after a record result in 12, and importantly, no loss of contracts other than what was scheduled to come off. We've maintained our scope of services on our existing contracts, so that remains largely unchanged. And as I said, it's a strong endorsement of the way we work and the relationship that we have with our customers, which is certainly positioning us very well for future work as the sector starts to come back on. Margins were impacted by the lower utilisation, and we see this recovering slowly. And as I say, we're off to a very positive start in the new year with those two continuous miners going on higher. The engineering and services divisions have made strong contributions, and engineering is on track for a similar result. And as I say, services will be a very low cost operation in 14. And very opportunistic as those, if we can secure projects for services through 2014. The tendering pipeline and the active tenders obviously positions us well to expand on what is already a very solid order book, and our FY14 conditions will remain challenging, but we have a very, very positive outlook to 14 because of that new work already secured. 6 new contracts. We're winning contracts. We're mobilising people, and no one else is doing that in our space at the moment. We've got that track record for renewing contracts. We've got 3 to renew this year, being the Oakey Creek, the MNC Drivage, and the MNC Umbrella. And again, we've got a high degree of confidence because of our track record in renewing those contracts. Importantly, coal volumes are not going down, so they remain very strong, which always drives our services. And our equipment utilisation returning to normal levels is important to, as I say, driving our margins, and will give us some upside as that starts to come back on. And that last point there is around increasing our market share by replacing other contractors, which we've demonstrated we can do, and through the increased use of contractors as the sector starts to stabilise. So on that, I'll hand back to our moderator to start the Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press the pound or hash key. Once again, ladies and gentlemen, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. And your first question comes from Connor O'Free from Phillip Capital. Please ask your question.
Afternoon, gentlemen. Just a couple of quick ones on me. Just on the order book, does it include the preferred contractor status on the Gregory Crinum mine?
Sorry, the order book, Connor?
Yeah. Does the order book include the value of any work you'll do under that preferred contractor status?
It does, Connor.
Yeah. Okay, that's fine. And just a word on what you think on CapEx for this year.
Yeah. So at this stage, Connor, we've got nothing major in the pipeline, but obviously, as I mentioned, the balance sheet was in good shape, and there are some considerations that we're looking at, at the moment. But with the equipment fleet that we've got, we still want to make sure we utilise it before we go buy anything the same as what we've already got. So it's only if we're focusing on particular services that that we can expand within the current range of services that we've got, that we'll look at spending more CapEx. So short answer, not much at this stage.
I mean, about the same as last year, or even lower than that, do you think?
Yeah, probably about the same. Maybe just a little bit higher, because there'll be some of the maintenance CapEx in relation to the continuous mines that come through.
All right. Thanks a lot.
Thank you very much. And your next question comes from Anthony Alcuri from Bank of America and Merrill Lynch. Please ask your question.
Yeah, guys. Just in terms of your revenue guidance for next year, now if I look at your what you did in the second half was about 100 mil revenue. If I annualise that, I get a couple of 100 mil for next year. Now you're guiding to 160. So could you just walk me through, firstly, what the key deltas are there, and secondly, what scope you have to do better than your guidance of 160?
Yeah, so, coming from that 200 back down to where we are now, Anthony, is, largely the roll-off of those those contracts that we had at Rio Tinto. So Tony, explained where we've gone from the infrastructure or the infrastructure contract with services and the development that we were doing there into the mine services and the strata support. So, the manning's a little bit less on those two contracts is what we had overall across the Rio site. So that's where we largely come back down to that, that 160 million. And just a little bit of contraction on some of the other projects. Right.
Okay, that's fine. And then a comment on the scope to do better than that.
Yeah. So obviously there is scope to do a little bit better than that with with the renewal of the umbrella contract at Moranbah. There's potential scope increases on the work on the way they're looking at tendering that piece of work. So rather than just across the one site, there's potential to expand that scope across a couple of sites. And the same as Oaky Creek. So the renewal of that is going to look like a potentially expanded capacity or scope of works on the Oaky projects as well. And then that 160 million you're talking about obviously doesn't include any more pipeline. So there's also what we've got in the pipeline now, as well as those development / drivage projects that we've said will come out of tender in the next 6 months.
Okay. Also, just on your the cash tax paid, you had some funnies in prior years. Are you expecting anything in FY14?
No, not at all, Anthony. I think in the past we've had those. Since the IPO, we had there's those changes in tax legislation which reduced our tax in that first year, which reduced our instalment rates as well, which is why we had a lower cash tax payments in FY12, and then obviously the opposite of that's come through in FY13. But we expect that to go back to normal levels, back to our sort of cash is going to be pretty similar to our expense over the next couple of years.
Okay.
Thank you very much. And your next question comes from Jacqueline Fernley from Wilson. Please ask your question.
Yeah, hi guys. Key question from me is just your decision and the thinking around putting the CapEx into the maintenance of your third continuous miner. I think the last time we spoke, you were sort of holding off because of, I suppose a level of conservatism. So should we read into the fact that you've pressed the button a level of optimism that you can actually get it out on hire?
Yeah, definitely, Jackie. Obviously, we've spoken about those other two miners that we've got back into pieces of work, and probably the key thing there is, for that equipment is going back to those drivage tenders or development tenders that Tony mentioned that we'll see starting to come through in the pipeline in the next 6 to 12 months. And key consideration for us there is the timing to do up those pieces of kit. If we leave it, if you leave it too late, you'll miss the boat. We can sort of spread the timeline out a little bit now, to the point where we can hit the button and speed it up and bring it in, ready for one of these contracts should something come up quicker than what we expect. So it's more about being ready for when those contracts do come online. So yes, we do have a higher degree of confidence than what we expect.
Thank you, Jacqueline. Once again, if you wish to ask a question, please press star 1 on the telephone and wait for your name to be announced. There are no further questions at the moment. I will hand it back to Tony for continue.
I guess in wrapping up, I'd just like to thank everyone for sticking around so late in the day. Just want to again reiterate our confidence in going forward. It has been a very, very challenging environment, but the business is extremely well positioned, and we've got a very, very good number of people and critical mass of people in Queensland and New South Wales, which is going to position us well to take advantage of the opportunities as they start to present. So thank you, everyone, and look forward to catching up with you as we do the roadshow.
Ladies and gentlemen, that does conclude the conference for today. Thank you for your participation. You may all disconnect.